The Bitcoin bloodbath continues, and it's getting worse. Just when traders thought $97,000 was the bottom, Bitcoin shattered through that level today, plunging to a shocking $96,000. This marks the lowest price we've seen since May 8, 2025. But here's what should terrify you. Over $1 billion in liquidations in the past 24 hours. $870 million in ETF outflows in a single day. And long-term holders dumping 815,000 Bitcoin onto the market. The Fear and Greed Index? It's crashed to 22. We're not just in fear territory anymore. We're in extreme panic. I'm about to break down exactly why this collapse is accelerating, what critical levels we're watching for next week, and whether this is capitulation or if we're heading even lower. If you're holding Bitcoin right now, you need to hear this. Subscribe for daily crypto alerts. Let's be brutally honest about what's happening. Bitcoin isn't just falling, it's in free fall. Today, November 14th, Bitcoin dropped to $96,000. Some exchanges reported lows as deep as 94,700. This is a 6.2% drop in just 24 hours. But over the past week, we're looking at losses exceeding 24% from the recent peaks. The market reaction has been catastrophic. 96 of the top 100 cryptocurrencies are down today. 96. The total crypto market cap has plummeted to $3.38 trillion, shedding over 5.6% in a single day. Ethereum got massacred, dropping 9.2% to just $3,208. XRP fell nearly 4%. Solana crashed almost 10%. This isn't selective selling, this is across-the-board panic. And the liquidations? Over $1 billion wiped out. Long positions are getting absolutely destroyed. Traders who bet on a bounce are being liquidated left and right, creating a death spiral that's pushing prices even lower. The crypto market has lost over $300 billion in value in just the past few days. Let that sink in. 300 billion. Gone. Why is this happening? Why now? Let me break down the perfect storm that's crushing Bitcoin. First, the institutional exit is massive. $870 million in ETF outflows in one day. That's not profit-taking, that's panic selling by the smart money. November has now seen cumulative outflows exceeding $622 million, with the week totaling over $1 billion in net exits. Remember October? $3.5 billion in inflows. September? Another $3.4 billion. Now, institutions are running for the exits. When the big money leaves, retail gets crushed. Second, long-term holders are dumping. On-chain data shows they've sold 815,000 Bitcoin over the past month. That's the largest selling wave since January 2024. These aren't weak hands. These are the whales, the believers, the hodlers who've held through everything. And they're selling now. They've realized over $3 billion in profits since November 7th. When the smart money takes profits on this scale, it's a massive red flag. Third, $5 billion in Bitcoin and Ethereum options are expiring today. This concentration of risk around key strike levels at 100,000, 95,000, and 90,000 is fueling massive volatility. As prices move toward these levels, hedging flows and forced position closures are accelerating the crash. Fourth, the Federal Reserve uncertainty is crushing risk appetite. With rate cut hopes fading for December and the strong US dollar continuing to strengthen, Bitcoin is getting pummeled. The government shutdown may have ended, but the economic data has been delayed. Investors can't price the outlook, and when there's uncertainty, they sell. Fifth, the Bitcoin treasury trade is collapsing. Companies that added Bitcoin to their balance sheets are struggling. MicroStrategy's stock has plummeted over 50% from its highs. When the corporate Bitcoin narrative fails, it creates selling pressure across the board. The charts are screaming danger. Let me show you what's making technical traders extremely bearish. Bitcoin has broken every major support level. The psychological $100,000 barrier, shattered. The 99,000 support, obliterated. We're now testing the 95,000 to 97,000 zone, and it's not holding. The next support, $93,700 to $91,300. If that breaks, we're looking at a potential collapse to the high 80s or even mid-80s. Here's what's really concerning. A death cross is forming. The 50-day moving average is about to cross below the 200-day moving average. This is one of the most bearish signals in technical analysis. Historically, when Bitcoin forms a death cross, it signals extended downtrends with corrections averaging 21 to 34%. We're already down 24% from the recent peak. If the death cross completes, we could see Bitcoin test the $70,000 to $75,000 range in a worst-case scenario. The head and shoulders pattern that's been forming, it's completing. This classic bearish reversal pattern suggests we haven't seen the bottom yet. Look at the RSI. It's sitting at 41.69 on the daily chart. That means Bitcoin isn't even oversold yet. There's still room to fall before we hit those extreme oversold readings that typically mark bottoms. The Chaikin money flow shows outflows absolutely dominating. Money is fleeing Bitcoin. This isn't rotation. This isn't profit-taking. This is fear-driven selling at scale. The sentiment has completely collapsed. And when I say collapsed, I mean we're seeing levels of fear we haven't witnessed in months. The crypto fear and greed index has crashed to 22. That's not just fear. That's extreme fear. Just 4 weeks ago, this index was at 60, showing greed. We've gone from euphoria to terror in 1 month. Think about that psychological shift. 1 month ago, everyone was bullish. Everyone was buying. Today, panic selling dominates every time frame. Social media is exploding with fear. Crypto Twitter has gone from Bitcoin to 150,000 to is this the start of the bear market? The sentiment shift is visceral. You can feel the panic. Trading volume has surged to $254 billion. But here's the key. High volume during a crash indicates capitulation. Weak hands are being shaken out violently. Retail investors who bought the top are now panic selling at massive losses. Bitcoin dominance sits at 58%. While the entire market is down, Bitcoin is actually holding up better than altcoins. But that's not bullish. That means traders are fleeing smaller cryptos for the relative safety of Bitcoin, and even that isn't stopping the bleeding. The altcoin season index has crashed to just 22 out of 100. Altcoins are getting absolutely demolished. This is a full-scale crypto market rout. Where do you think BTC will be next week? This is the critical question everyone's asking. What happens in the next 7 days? Let me give you the scenarios, and I'm not going to sugarcoat this. The bearish case, most likely right now. Bitcoin fails to reclaim $97,000 and continues bleeding. The $95,000 to $93,000 range gets tested hard. If that breaks, we're looking at a rapid descent toward $90,000 to $91,000. Technical analysts are warning that the crucial support zone between 93,700 and 97,500 is the last line of defense. If this area fails, the next target is around 91,300. Given the death cross forming, the continued ETF outflows, and the extreme selling by long-term holders, this bearish scenario has a high probability of playing out over the next week. The neutral case. Possible but uncertain. Bitcoin finds temporary support around 95,000 to 96,000 and consolidates in a tight range. We see choppy, range-bound trading between 93,000 and 99,000 as the market tries to find equilibrium. This would require selling pressure to ease and some stabilization in ETF flows. The options expiry today could provide some relief if we get through it without further cascading liquidations. However, with the Fed meeting in December approaching and ongoing macro uncertainty, even this neutral case looks shaky. The bullish case. Low probability. Short term. Bitcoin stages a sharp reversal, reclaiming 99,000 and pushing back above 100,000. This would require a catalyst we don't currently see coming. What could trigger this? Emergency Fed intervention, massive surprise ETF inflows, or some major positive regulatory development. But right now, there's no indication any of these are coming. For the bulls to regain control, Bitcoin needs to reclaim 100,500. That would be the first signal of a local bottom forming. But until then, the market structure remains firmly bearish. Critical levels to watch next week. Resistance: 99,300 to $100,000. Current support: 95,000 to 96,000. Major support: 93,700. Critical support: 91,300. If we break 91,000, the next stop could be the high 80s, or even a test of the April lows around 85,000. Let me zoom out for a moment, because while the short term is terrifying, the longer term picture is more nuanced. Here's what you need to understand. Corrections are normal. Even in bull markets, 20 to 30% pullbacks happen regularly. Bitcoin has corrected 24% so far. The previous corrections in April and mid-2024 were 33 and 34%. So while this feels catastrophic, it's actually within the normal range of bull market corrections, if this bull market is still intact. The fundamental thesis hasn't changed. Bitcoin's supply is fixed. The halving earlier this year reduced new supply. Historically, 12 to 18 months after a halving, Bitcoin sees massive price appreciation. We're in that window. Some analysts believe this is exactly the type of capitulation that marks market bottoms. When everyone is fearful, when weak hands have been completely shaken out, when even the believers start to doubt, that's often when smart money starts accumulating. There are whispers that institutional buyers are actually accumulating during this dip. Anchorage Digital received 4,094 Bitcoin, worth approximately $405 million, over the past 9 hours from major exchanges and institutions. While retail panics, institutions may be buying. But here's the reality. We could still go lower before finding a true bottom. The 92,000 to 95,000 range is being mentioned by multiple analysts as a potential accumulation zone. Some even think we need to see the high 80s or low 90s to truly flush out all the weak hands. The December Fed meeting on the 10th will be critical. If Powell signals more rate cuts or a dovish stance, that could be the catalyst for reversal. If he remains hawkish or signals no December cut, we could see another leg down. What are the experts saying? The opinions are divided, but leaning bearish short term. Nick Puckrin from the Coin Bureau says, Bitcoin appears to be fighting one battle after another, dragged down by US dollar strength, higher treasury yields, long-term holders selling, and macro uncertainty. Technical analysts are warning of potential retests of the 91,000 to 97,000 range, as the MVRV ratio forms bearish divergence. Some traders are pointing to the 92,000 to 95,000 zone as offering potential value once leverage clears and sentiment stabilizes. But they emphasize, this is an emotional shakeout, not necessarily a trend reversal. However, there's a contrarian view gaining traction. Historical data shows that every 20+% drawdown in a bull market typically sparks a 40+% rebound within 60 days. If that pattern holds, and if this is still a bull market, we could see Bitcoin roar back to 130,000 or higher by early 2026. But that's a lot of ifs. Tim Draper maintains his $250,000 target for 2025. Tom Lee still believes Bitcoin could hit 250,000. Standard Chartered stands by their 200,000 prediction. But here's the truth. Those forecasts seem distant right now. When you're watching your portfolio bleed, when Bitcoin is crashing daily, those bullish targets feel like fantasy. The consensus for next week? Continued volatility with downside bias. Most expect Bitcoin to test lower support levels before any meaningful recovery begins. So where does this leave us? Bitcoin is in crisis mode. There's no sugarcoating it. The continued fall below 100,000, then 97,000, and now testing 96,000 shows that selling pressure is overwhelming any buying interest. Next week looks rough. The technical setup is bearish, sentiment is in extreme fear, and the catalysts for reversal simply aren't there yet. Be prepared for continued volatility and likely lower prices. Critical levels. If Bitcoin breaks below 93,700, we're likely headed to 91,000 or lower. If it can somehow reclaim 99,000 and hold, we might see some stabilization. For traders, this is not the time to over-leverage or try to catch falling knives. Wait for clear reversal signals. Watch those key support levels. Use tight stop losses. For investors, dollar cost averaging into established support zones might be wise if you believe in the long-term bull case. But be prepared for more pain before recovery. For everyone, manage your risk. Don't invest what you can't afford to lose. This market is brutal right now. The next 7 days could determine whether this is a healthy correction before the next leg up or the beginning of something more serious. The Fed meeting in December will be the key inflection point. Stay alert, stay informed, and most importantly, stay disciplined. This is when emotional decisions destroy portfolios. Hit that subscribe button for daily updates as this situation develops. We're monitoring every tick, every level, every development. The Bitcoin market never sleeps, and neither does our coverage. This could get worse before it gets better. Be ready.